Hello, hi, how are you doing? Hope this rally, this dip, and all is not scaring you off. Well, it's of course, you feel bad when there is a dip, but actually, these dips are necessary. Because there should be some correction happening. Otherwise, the stocks would keep getting expensive and expensive, and there is general this feeling that this froth accumulates. One, because of that, and two, it gives an opportunity to buy now, but you have to be stock specific. Okay, so now what is the thing is that you have to choose the stock. Actually, this has been the case even in the bull market. Okay, when the market was running, when bulls are charging and all that, even then also you have to be stock specific. I have been always telling in all my videos that you have to pick and choose your stocks. You have to be very careful about the stocks that you pick, and they should not be led by only momentum. You can buy some momentum stocks, but only after looking at the technical and fundamentals of the stock and of the company in which you are investing. You're becoming a shareholder of a company. So today in this video, I'll be talking about some stocks which you can think about even in this dip. And these stocks, if there is a dip which is good, then you can accumulate and buy them. They may turn out to give you good returns. Okay, so now uh, because what happens in such a market is that like it happens in the bull market also, where should I invest? All stocks are doing well. It also happens in a bear market. Oh, where should I invest? I should not lose my money. Okay, so these I'll talk about three stocks. Okay, and yeah, one stock which I want to definitely talk about is HDFC Bank. Many people are asking me and are also confused. Experts are also discussing, and they are divided whether you should buy HDFC because it has become cheaper, and or you should avoid this stock because it is a very slow mover. Well, I agree with some of them, and I also agree with the others. The thing is that if you are a long-term investor, then you definitely should buy HDFC Bank. It's a great company. It's a great bank. It's a great stock, and you can rely on it. Park your money and just leave it for 2 3 years. But if you're a short-term investor or a medium-term investor, then there are other options like Canara Bank is there, IDFC First Bank is there, ICICI Bank is doing better than HDFC Bank. It has given around 9% returns in the last 1 years, and HDFC is like minus 4%. So you can pick and choose what kind of an investor you are accordingly. And also there are other banks like IndusInd Bank is also very good if you want to make good money out of it. So first choices is SBI and BOB are the first choice. Second choice is Canara and Union Bank. Okay. Then third choice, if you are a short to medium term investment, third choice can be PNB, etc. These because many PSU banks are also rallying. So what to do? You cannot invest in all PSU bank, because what happens is that when the rally is over, suddenly your funds are gone. Okay, so these are few names which are preferred. Where you can probably park your money. You have to use your discretion, talk to your advisor, and accordingly take your decision. And otherwise, yes, HDFC Bank is a long-term bet. Okay. So today I'll talk about three stocks which you can park your money in. In this dip, this is a good opportunity to buy. So Finolex Cables is the first stock about which I'll talk. It's trading today. Today I am on 21st September. I'm making this video. It's around 1088 rupees per stock. And we all know that Finolex Cables is a good company, good stock, and the stock has rallied. The chart is just going up. So cable company stocks are really doing well. Polycab, you can look at. KEI Industries is another such stock. Now Finolex is cheaper than, of course, Polycab, what a run Polycab has had, and KEI. So if I look at the company, the ROC is around 18% and ROE is around 14.4%. As I said, the stock has rallied. If I look at the chart, last year on 21st September, it was around 475 rupees. And if someone bought at that time, great going. In this January only, it was 542. rupees. So this stock has just rallied. So there is more window for it to rally. That's why I'm telling them these stocks. Okay, company is debt free, and it has been maintaining a good dividend payout also of 24.6%. If I compare with the peers, where ROC is 18.5%, as I said, which is above Universal Cables. This is another stock which I've discussed in my mid-cap stock video. So this has a higher ROCE from that company, 18.5%. RR Kabel, which is a new listing which has happened. That is also a good stock. So it's higher than that also. And Paramount Communications. So as I said, KEI has around 27% of ROCE, and 26% of ROCE, and Polycab has around 27%. It is just placed next to it. Okay, quarterly results, if we look at, then the net profit has declined a little bit quarter on quarter. But if you look at the overall picture, then the profit has gone up from 2020 June. It was around 35 crore rupees, and now it is this June it is 132 crore rupees. This is net profit. Okay, this was quarter on quarter. But if you look at the year on year thing, then it has the net profit has gone up from 502 crore rupees to 538 crore rupees. Okay, operating profit has also gone up from 496 crore rupees to 526 crore rupees TTM. Okay, return on equity, as I said, is around 14%, 13% for the last 3-4 years, and total assets of the companies have grown, and the debtor days have gradually decreased of the company. Shareholding pattern, 35% is with the promoters, 37% is with the public. So highest chunk of the company is with the public. 35%, which is 36%, is with the promoters. Okay, so this is a good stock. Finolex cables and wire stocks are doing well. In infrastructure stocks are doing well. Housing is doing well. Railways are also doing well. So this can be a good bet, and because this has dipped in this correction. The other stock is Sun Pharma. We know the story of Sun Pharma. I don't talk about this stock much because I made a video in 2021. Okay, at that time this stock was around some 300 something. Now for someone, it's like I advised buying at that time. I remember in that year itself, it rallied up to 500 rupees per stock. Now today it is at around 1142. Okay, it has corrected around 1%. So this may be an opportunity to buy, because there is a good there's a new target also for Sun Pharma. Okay, so this has again a potential of going up. Anyways, pharma stocks are again doing well. So we know Sun Pharma is a good stock. It's a good company also. It's a stable company. This stock has given good returns. So ROC is around 16.4% and ROE is around 16.6%. If you look at the chart, it has done well. There was a dip in May when it came down up to 929 rupees. Okay, actually that was the time to buy. It was hovering on this at this level. It was hovering from Feb actually, when there was this dip in the pharma stocks and all. And after that, when post March, when they again were in the reckoning, they came back in reckoning. Hospital stocks are also doing well. Pharma, it's come back now to its post COVID demand kind of a thing. So people are now doing these routine checks and all these things again. So now this demand is coming up. Achha, there's one more thing, is that there's a difference in pharma. There are hospital stocks and there are these medicine and API stocks. So hospital stocks are also doing well. I ventured in that area. The company has given a good profit growth of around 26.4% CAGR over the last 5 years. Peer comparison, ROCE is 16.4%, which is up there, along with the Dr. Reddy's is around 26.7%. Zydus Life Sciences is 15%. Cipla is around 18.2%. So its ROCE is decent. And if you look at the quarterly results, then net profit has gone up from 1983 crore rupees in March 2023, this is year, quarter on quarter, to 2006 crore rupees in June. If I look at the quarterly results, quarterly profits, then it has dipped a little bit from 8,513 crore rupees to 8,425 crore rupees. But these things keep happening. That doesn't mean that the stock is not good. It's an excellent stock. Return on equity has been 14 to 17% the last 4 years. Total assets have grown, and fixed assets have also grown for the company. So if I look at the shareholding pattern, then promoters have 54.48% of stake in the company, and the next highest are the DIIs and FIIs after that. Okay, so Sun Pharma is definitely a very good stock. If you ask me, is there more upside left? We all know it's a good stock. So yes, there is good chances of more upside. Now the third stock is Titagarh Wagons. Okay, now this stock is, we all know rail stocks have just rallied like anything. So now this stock is today 794 rupees. Now this is up today 3%, so you can probably wait for a dip. ROC of the company is 17.6%. ROE is around 13%. Now this is a good stock. This has just given great results, returns. See, I'll tell you, last year on 21st September itself, it was around 148 rupees. And today it is around 794 rupees. Now you will ask me, is there more room for returns and all that? Yes, there is still some room. Okay, and you can rely on this stock because more and more railways and infrastructure spend is happening, so you can rely on the stock. Company has reduced its debt. It's a thing that now PSU stocks are in demand. People used to avoid PSU stocks and used to run away from PSU stocks, but days have changed. It has given good profit growth of 24% CAGR over last 5 years. Actually, I have a very bad throat, so I may be sounding funny, I think. So okay, ROC, if we compare with the peers, then it is above Bharat Dynamics and even Thermax. So this is a decent stock. BML से भी ऊपर है ये. If you look at the quarterly results, then profits are up from 48 crore rupees to 62 crore rupees, and year on year also the profit is up from 126 crore rupees to 188 crore rupees. Now funnily, in March 2022, the net profit was minus 1 crore rupee. Before that it was minus 19 crore rupees, and before that it was minus 36 crore rupees. 2018 it was around minus 147 crore rupees. This is the profit. Just look at the turnaround in this company, and I have this stock, and this stock has given great returns. If we look at the debtor days, they have come down in this March. Okay, shareholding pattern, promoters have around 44.96% stake in the company, and the next highest is the public, which has 33% of the stake in the company. So this is a good stock. Again, you can think about this stock still there is some time, and as compared to other many very highly priced stocks. Actually, when you get some capital, you start wondering, where should I put this capital, where should I deploy in such a market, because there's some new IPOs also coming which are decently good, and then you also think about, okay, there are some stocks which I always wanted to buy. So where should I put my money in? So in such a situation, you have to be prudent and pick up stocks which do well in a bull market, but more importantly, which do well or decent or don't tumble in a bad market. Okay, so those are the stocks that you should pick. They may sound boring also sometimes, because you may hear their name quite a lot, but keep your ears and your eyes open before investing. Okay, there's one more stock which you can think about is Shriram Finance. Now the stock has become really very expensive. 1923 was the last time when I saw it, was the price. uh, the housing loan demand, the management was is very positive about it. Housing loan demand is good. 15% of the overall, or 15% is the overall guidance which they're looking at for the next financial year. AUM is also up around 19% is the there's increase in the AUM, and there has been no demand deficit even though the monsoons have been bad. So this is again a good stock, but it has become very expensive. So if there is a correction in a market where this stock dips, I just look at this Shriram Finance stock, then you can probably buy the stock. It is today at 1905, so it has dipped a little bit, but still it is very expensive. uh, Post June, this stock has just seen a marvelous rally. Okay, so now this is where I am ending this video, because I have more stocks. You can even ask me questions if you want, to ask, and open your demat account if you haven't started investing. And if you're scared to invest in stocks per se, then you can of course go for mutual funds. They're safer as compared to this. Okay, so someone was asking me about Power Grid. Should they buy or they should not buy? Power Grid is currently doing well. It has given good returns. Power Grid and NTPC both. So they have given good returns. If you are a momentum investor, you can probably invest in these stocks. And with this power deficit and all, there's more demand for power. They are good stocks currently, but you have to keep a watch. Okay, so I'll see you in my next video, or my next live, or my next shorts or reels or whatever. And do keep investing, and these dips are good, but you have to make the right choice and stay positive about the India story. I'll see you soon. Bye.